Hello, everybody. So in this video, I want to introduce you to the practice set. The practice set is going to be in total 60 points. There's two parts. We're going to be working through the first part, and the first part is essentially just working through the accounting cycle. Because you're working through the accounting cycle, every step, steps 1 through 8, preparing journal entries, putting the entries effects into the ledgers, taking the ledgers, making an unadjusted trial balance, adjusting entries, adjusted trial balance, financial statements, closing entries, post-closing balance, right? Those are the 8 steps. Now, it's going to take some time, but if you work through it methodically and try to get through the parts I suggest in the course schedule. So, for example, for the first week, I suggest basically getting through steps 1 through 3. Then 4 through 5, and then 6 through 8 in subsequent weeks. That will get you up to the due date in a measured pace. The worst thing in the world, and I did this as a student, do not do what I did, is to put it off to the last minute and try to do the whole thing in a day. So I want to share with you the files, the Excel file, and also the Word file that you're going to use for this. So the Word file has a lot of facts about the company. Now, the first part, part one, where it talks about each of the items, it's worth a skim initially just to see what it's telling you about. But what it's really discussing is what is on the company's, what goes into the company's accounts, right? How it defines certain accounts, and also for the numerical information, it's giving you information as of the beginning of the year. So, for example, it breaks out the prepaid insurance contracts into individual insurance contracts and tells you about the life that's remaining on those contracts. It breaks out the PP&E, the land improvements, buildings, how it comes up with the final PP&E and net number, PP&E net number, and also the useful life. A lot of this stuff is going to be used in your adjusting entries, right? This is a post-closing balance of the year 2021, which has already happened. So basically, this is where we're starting the problem on January 1st, 2022. These are the account balances at the end of the prior year when we reported and closed the books. And then it tells you about transactions that occurred during the first quarter of 2022. So these are the items that are not in these totals. This is our beginning balances. And all of these transactions will affect the balances of the accounts that we see here. So you're taking it forward from January 1st and doing a full accounting cycle for 1 quarter, the first quarter of 2022. I would recommend you working through, of course, and stopping at part C for the first unadjusted trial balance. Basically, what I'm asking you to do this week is to record these as journal entries, post those to the ledgers that I'm going to show you in a second, and then getting unadjusted balances for each of the accounts so you can create an unadjusted trial balance. Then you can proceed into the adjusting entries. This is where you're going to find a lot of the information you need to make these adjustments correctly up in the first part with the more descriptive pieces about the different accounts. All right, so let's look at the Excel file. I'm going to stop sharing that and then move over to here. Oops, not that. Give me one. All right, sorry about that. I almost thought I showed you the answers, but I didn't. So anyway, I do want to share that file. Um, I saw a completed adjusted balance. I thought, oh, I got to redo this whole video. No, but this is the one that was from the prior year end. The journal entries for the first quarter are going to come into this tab. The next tab has calculations for adjusting entries. You don't have to touch that until step 4. Adjusting journal entries go in this tab. Again, a step 4 item. These blue color coded items are our ledger accounts. So this is a big piece. basically, these are formatted perhaps a little differently. Here's the T account here that's sort of called and highlighted by the red bordering on that Excel file. So this is what we would see basically in a T account. What's running over here is what is the cumulative balance at this date. So for example, I start with a $15,780,000 balance here. If I debit that account with a journal entry and then enter that debit here, then I'll need to code it, and I'll show you how to do that in a second. But basically, what this updated balance over to the right is all right, well, we started with a balance of 15,780,000. We entered in a $2 million effect to that account. We got $2 million of cash. And so now our balance at that point after that one transaction would be 17,780,000. So it just adds to the balance. Um, so that's basically what's going on here. All the assets are in one tab. All of the liabilities and equity accounts are in a second one. And all of the income statement accounts are in a third tab. The next tab is where we'll enter in our unadjusted balances. I still have that there. I forgot to delete it. It's not giving away too much, honestly, so it's fine. The adjusted trial balance, the financial statements, and the closing entries, the post-closing balance. So it's a lot of tabs. I get it. It's a little overwhelming. So just take it piece by piece. The first pieces that you have to deal with really are just up to the unadjusted trial balance tab. And you don't even need to work through all of those tabs because, um, going back just a little bit here, because you don't need to do the adjusting entries as part of that. All right, so let's just step through it. The first tab I didn't go over, but just to show you, this is a listing of all the accounts that will be used. I use it to create drop-down menus in the Excel. You'll see what I mean in a moment. But here's where you can always go to find out what the account is, what type of an account, where it's classified in terms of current assets, long-term, et cetera, what financial statement it's on, and its official its official code in the company's bookkeeping. So let's look at the first entry and make the first journal entry. I'm going to go back to the document. It says that on January 1st, TBT issued an additional $20,000 shares of $1 par common stock in exchange for $1,680,000 cash. So we got $1,680,000 cash for issuing 20,000 shares of stock. Let's go back to the Excel file in the journal entries. So I got cash. That's how I select my cash. I just use the drop-down menu and then select the one I want. As you can see, this is linked to that first tab so that it gives you, excuse me, it gives you all of the accounts on the chart of the accounts as a potential drop-down option. We know it's cash. It was for 1,680,000, and we dropped that in the debit column. Now, we had in exchange for this cash, we issued common stock. And there's a rule about common stock. So I'm looking for the common stock because we got cash, but we increased our ownership in the company through this exchange. And there's common stock. But when I record common stock, I can only record it up to the par value of the shares issued. So I issued 20,000 shares, and each share had a par value of $1. So the most I can credit this account for is by the par value of those shares, or $20,000. So I dropped 20,000 here. Now, where does the excess go? Because obviously we can't have this unbalanced journal entry. Should, as an accounting, when you're in accounting context, any entry that doesn't debits it don't equal credit should cause you a little bit of panic. The additional amount over 20,000 goes into additional paid-in capital for common stock. And this is just a bookkeeping convention because that arises because we limit the amount of the credit we can make to common stock to the par value of the shares. So the excess, 1,660,000, goes here. Now, you can do type the number in directly, but using Excel really helps, and it reduces the amount of like just fat fingering, right, that you can do when you're entering numbers. If I know that this has to be make up for the difference between the cash amount and the common stock amount, then I can just take that difference and then put it there. Okay. So that's, use it like a calculator. It's half calculator, half document, Word document, basically, is kind of how you can think about Excel. Now, we have this entry. Every time you make an entry, I would immediately put it in the ledger and make sure that that happens because otherwise you might forget if you're trying to do them all at once, you might lose your spot, right? It gets a little more complicated. But dealing with it one at a time, it helps a little bit. So now I'm moving over to the ledger from the journal entries to the ledger assets tab because I know cash was involved, right? So cash began at a balance of 15,780,000. I'm going to bring the date over by doing cell referencing. And so what I did is I just put an equal sign in the cell that I want the information to appear in. Then I go back to the tab that I'm referencing, which unfortunately I didn't put a date in here, but when I do, it'll be right here. And so I just click the tab and then I click up to the cell and then I hit enter. Now it doesn't have anything useful here now because that cell is empty. But if I go back and put in the date, which was January 1st of 2022, if I go now back over to ledger assets, it correctly asserts that the date is 1/1 for this entry. And the debit amount, again, I'm going to use cell referencing. I hit equals here, click on the tab for the original journal entry, and then the cell that has the amount of cash I want to debit, and then hit return, and then it automatically pastes in there. So you might ask, well, why would I want to do that? Right? Why not just type in 1,680,000? Well, first, again, fat fingers. I do it all the time, all the time. So helps eliminate that. The second thing is if I go back and I'm like, you consult with me or you realize you make a mistake and you need to change this value, well, you just have to change that value. And then notice, right? Well, because I did the math here, it changed the rest of the journal entry appropriately. But on top of that, if I go over to the ledger assets, it's changed here as well. And so, because the accounting cycle is moving information through a process like that, if you cell reference and you have a mistake, you do the whole project, step eight, and you ask me to look at it, and I'm like, ooh, there's something way back in step one that's a problem. If you cell reference, you just have to fix step one, and then it fixes steps two through eight, right? Vital for this project, absolutely vital. Cell reference everything. Um, to complete that, well, first let me fix the amount. And then to complete it, let's go ahead and log in the common stock and additional paid in capital. So I would go to the liabilities and ledger tab. Common stock is over here. Need to reference the date and cell reference the credit amount here. And for additional paid in capital, we'll do the same thing. All right. So notice the difference between these two tabs. On the ledger assets, right, we had the original amount, we had the adjusting that I dropped in by cell reference, and then we have a lot more room before this shaded box comes up. On the other equity side accounts, the shaded box is already here. What does that mean? This shaded box corresponds to the color of the tab of our Just a moment. Ew, why does this thing haunt me and hide? Yes, it does. All right. It relates to the color of the unadjusted trial balance. This is what should come over from that account. So for example, in the equity tab, the equity ledgers, we're already there, which means that there's no more transactions that happen to the common stock account prior to the unadjusted balance. No more transactions that happen to APIC before the unadjusted trial balance. So we can go ahead and find that balance with what we have. And this is what I was going to suggest, and I'll show you on the cash account as well. But we know that equity has a credit balance. So we're in the credit balance column here. And in order to get this balance, we're going to take the beginning balance, add anything that credited this account because equity is a credit account, common stock is, and subtract anything we enter as a debit. That's going to give me my final balance for common stock for the quarter because there's no other common stock transactions. Do the same thing for APIC. Start at the beginning balance, add the credit balance column here, and then subtract the debit because debits reduce equity accounts. And then hit return. We have the formula copied. These are the balances for those two accounts. We can then cell reference again, go to the unadjusted trial balance for equity. Common stock is on row 29. I'm going to cell reference to back to the equity tab. This is my common stock balance on the unadjusted trial balance. Hit enter and it replicates over or copies over. Same thing for additional paid in capital and it's copied in. Okay. I just gave you the answer for two pieces. Right. That's a great help. It's too many other things. All right. So let's think about one more thing, cash. So I want to show you why I would use a formula here. Now, we're going to have, as you can see, a lot of cash transactions before the end of the before the unadjusted trial balance comes. So we're going to be spending cash on things and getting cash from customer interactions, right? Paying bills, etc. So I'm just tossing in a bunch of random debits and credits here. Okay. So remember how to do this. This is a little different because cash is a debit balance account. It has a normal debit balance. So it should always have a debit balance because it doesn't make sense to have a credit balance of cash. So the debit balance will be equals the beginning balance plus debits this time minus credits to cash. And that gives me the ongoing balance of this account. Now, the nice part is now in Excel, because we entered that formula, we can copy that formula to every cell subsequently, right? So all it does is every cell now becomes, okay, I add the prior balance, I add any debits, I subtract any credits, and that gets me the next input. Take the prior balance, add any debits, subtract any credits, gets me to the next amount. Now, notice something weird happened and I forced it. Notice we have a negative debit balance. That cannot be right. If you come up against a negative balance on these, right? Because what this actually suggests is not a negative debit balance, but that the balance would have switched to the credit side of the account. And why did that happen? Well, because we had a balance of $14.86 million of cash, and then I entered in $35 million of a credit, right? We don't have $35 million of cash to spend. And so the account went negative, right? We can't have negative cash. Doesn't make sense. So this is also a way to keep check of you, to keep, track of yourself to make sure you're being honest and like, oh, wait a minute. I actually added a zero and flipped those two digits. Oh, there we go. That makes sense, right? So that helps a lot, making that formula and then copying it down. If you lose the formatting of the highlight, you just come up here, redo it, boom. Okay. So it'll take a little getting used to. You might have to watch again if you're not used to using Excel. If you've used Excel, great. You're probably very proficient with cell referencing and copying formulas. If you're not proficient, there are tons of YouTube tutorials. I can help you out a little bit, although my Excel skills are kind of not as amazing as they should be. Um, for anyone in practicing industry, though, this is without a doubt a skill you're going to need to use in a business setting. Companies use Excel for tons of things, and you can use it for your own personal life's budgets and stuff very nicely as well. All right. That's about all I needed to share, and I hope it was helpful. If you have any other questions, please shoot me an email. I will have two workshops for practice problems this weekend, and based on student feedback, I might do those in the following weekend as well. All right. Have a good one.